Ladies and gentlemen, I'll be speaking shortly with XM.com's CEO of Australia, Peter McGuire. Peter, welcome back to the studio.
Good morning, Will.
Mate, it's been a big week, the week that was. Let's briefly remind people where it finished Friday and before we move into what's happening this week.
You saw a big sell-off as far as Chinese equities. I think that put a little bit of fear into Friday's trade. Dragged Asia down. There was no green shoots out anywhere, and that rolled into a bit of a washout as far as US equities. That's been, I think, from the equity side, a little bit of fear. And then the second side is you've seen that US dollar come off very, very solidly and gold go up to all-time highs. We've experienced that this morning. So that momentum to the upside, we made reference to that last week, has been a very, very strong move.
We're covering the what now. Now let's look at the what next. The Fed's meeting, the virus storm is worsening and the US and Eurozone is set for a historic GDP collapse. Talk me through it.
You've got that Eurozone and with the US, their GDP numbers coming out for that second quarter. Now, are they baked in? And until you actually see the raw numbers, people say, well, yeah, that's all been thought of and that's been put away. I think that realisation, this is as bad, and is it going to get worse in that third quarter? So there's the GDP numbers. Second one is, where does the Fed play? We've got that meeting. We understand what Jerome Powell said last month. He said he's not thinking about raising rates for the long run.
Pete, up on the screen here, we've got the Fed Reserve balance sheet. Mate, remind me or brief people, what's happening on this?
Well, as you can see, that flat line, monthly change in Fed balance sheet, 17 was pretty static, 18 didn't move much, 19, and then all of a sudden we're off to the races in 20 with a global pandemic. So you've seen that huge spike up really from just after that first quarter and to unprecedented numbers. We haven't seen stimulus like this really in history. So you're at $2,000 billion or $2 trillion, and what's going to happen now? Are we going to see a rerun of that? That's the major point that has been the stimulus-led rally of equities globally.
And the next chart I've got here is the US GDP. We're talking about contractions expected in Q2.
Yep. Well, you put your mind back there to 08. We had the big washout and, of course, the GFC, and we all remember that very distinctly. And since that time, you've had a very, very solid move. You've had a quarter here, a quarter there as far as negative growth. We have not seen anything like this. So there's that washout. We think it's going to be about 32 to 33% GDP contraction for that second quarter. Now, what happens as far as third quarter? We're already technically in a recession, 2 successive quarters of negative growth. So do we see the third quarter, the fourth quarter? Where are we this time next year? The numbers haven't necessarily turned around as far as virus in the US. We're still seeing some very, very frightening numbers from California, Arizona and Texas.
Well, talking Texas for a minute, I mean, one of the bigger impacts that's going to hit Texas is the approaching hurricane. I mean, it's going to force people together. We're going to see probably a greater breakout.
Exactly.
You know, the environmental situation over there is not good.
And it's only early in the season.
Very early in the season. My next chart I'm going to throw up really is around the proxies for China. And look, if we talk a bit about the Aussies being caught up here,
yep.
You know, and we look at this chart, there has been a rally.
Very strong rally. You're seeing that US dollar against the Aussie, so that's a blue line. So that's what it's based on. That we had there at January, we were at about 70, 71 cents. And then it's just capitulated all the way through to just under 58 within a matter of about 11 weeks. Since that point, it's been onward and upward. And there's no doubt the China-led rally has been very significant, I think, wind in our sails to help us hit those numbers. The other side, of course, is we've seen a dramatic sell-off. So Chinese equities have rallied strongly in the last matter of weeks. Also, we've seen that very strong sell-off as far as US dollar. So what happens in August could be a very different picture. If US dollar does rally, geopolitical tensions with China, and that's the fear that I think led into Friday's sell-off of 3.5% to 4%.
Hey, just a quick one, Pete, and then just looking around and thinking about the tensions there, it almost seems like there's a race for all navies to get ships and get assets into that South China Sea area. We saw last week the British talking up their aircraft carrier, sending it over. We've seen the Russians come out with some big numbers suggesting that they're going to field 100 plus ships, and clearly you've got the various Asian navies already there. So, mate, that's the surface level stuff.
Yes, exactly. Well, that's right. It's like a boat expo. You know, I've got the biggest cruiser, and we're going to have a big fish farm. The realisation is that you've just got Japan Vietnam, Philippines, Korea, all in that gateway. So they're all saying, well, really it's our islands, or it's our, and China's got a differing view completely. How this plays out, no one knows. And as everyone said, this election will be fought on China. We're only 95 days out. So if Trump doesn't move, you would think quickly and clearly and precisely, then Biden just rolls through. He's doing everything from his basement. He's not going out. He wears a mask, talks very little, and maybe it's in the bag. Maybe it's his.
He's running a survival campaign.
Yeah, and it's working very effectively.
Segue briefly into Japan. We just touched on Japan as a concept. Retail sales and industrial output in Japan, they were tracking all right. They're sort of late 2019.
Yeah, doing okay.
Clearly fallen off a cliff there.
Yeah.
You know,
how does it go as far as forecasted, and what's the rebound? Japan, third largest economy in the world. Too early to tell as far as does it bounce, and do we see a strong recovery? We understand the numbers coming out of Tokyo are very damning. We understand a number of those key prefectures, and of course the likes of Osaka and other big cities are dramatically in a lockdown or a semi-lockdown phase. So it's just a work in progress.
Mate, for a country that was gearing up for the Olympics, you know, there's a lot going on still behind the scenes.
Yep.
I think there's a lot of hope.
There is a lot of hope, and is 21 going to be their hope year that it all comes to fruition? Don't put your mind away from the longevity curve as far as the oldest population in the world. So there's the realisation. They've got to protect their senior citizens, and the numbers are just, you know, when you examine the demographics, Japan maybe is where we're all going. That older population base, and certainly less children, and in turn they're the risk factor. Everyone now over 60, they're saying, is the key age group that are in fear.
I understand they've also got a very strong superannuation platform,
funds, yes.
Big pension funds, very similar to Australia in that, you know, we've got some
sophisticated.
reserve.
Yes, they have, and they've got the firepower, they've got negative interest rates, and they've got a BOJ that's very committed. They've been down this road before, Japan. You put your mind back to 89, put your mind back to 08. So they're a very sophisticated capital markets, and how it plays, it's in the lap of the gods. No one can really forecast, but the graphs don't lie.
Talk to me about this for a minute. I mean, if we were looking at retail graphs anywhere in the world, can you think of a country that would actually have an inverse?
Exactly. They're an incredible city, and I make light of Akihabara, which is the electronics city in Tokyo, Greater Tokyo itself, only about 5 stops or 4 stops out of Ginza. Now, it's quite an amazing place. You know, you've got technology really the cutting edge technology of the globe is in that little suburb or city, they call it Akihabara. And their retail sales, everyone is technology savvy. Everyone has got the latest and greatest gizmos. So do we see a bounce? Do we see a strong recovery phase? And do those Japanese consumers really let us on? Or do they tighten their belt and say, not this year, and let's just see how 21 plays out?
Well, let's look forward. We spoke in the opening moments around the Eurozone, the GDP, and we talk growth, right? But there's no real growth if we.
Well, there was good
chart.
growth, Will, all the way back to 2008, and then all of a sudden you fell off a cliff with the GFC. Then you had that strong recovery in 10 to 12, little bit of a hiccup as far as 12, leading into that third, and then very, very nice growth across all of Eurozone. Remember, you had very cheap money. And it ran all the way through, and you think, oh, well, Goldie Locks is here, and then all of a sudden. And that's the number, and that's what we're looking at this week. We're looking at Eurozone and US GDP figures. So is it already baked in? I don't think so, but there's plenty of analysts to say, oh, all the bad news is through, and everyone's okay with it. I think when you finally get that realisation, this is the situation, this is the storyline, sometimes I think it really hits markets hard, and I wouldn't be surprised for that to wash out over this week.
All right, let's talk liquidity. On the next chart here, we've the overarching question is, well, is it coming back? Is it coming online? And one could almost argue that it looks like it could be, but is it?
Well, I want to make 2 quick points. First off, you've got that left line, which is the yellow, or yellowy gold, which is the S&P 500. The blue one is the Fed balance sheet. It doesn't take a rocket scientist. You don't need a PhD in economics to look that the blue line really is the balance sheet. That's the money. That's the stimulus, and it's been a stimulus-led rally. So what happens when the money dries up? What happens when you've seen that flatlining now? You've seen it flatline from really the start of June. We're nearly at the start of August. And are we going to see the rally go a little bit sideways, if not sell off? US dollars come off, Fed Chair Powell, where does he play? Where to Eurozone? It all leads me into one word, and that starts with G and ends with D, called gold.
Let's talk gold. Gold's still rallying hard. We covered it last week. We covered it the week before. I think that we'll be covering it again next week.
Well, it's 1945 in morning trade in Asia. We were at 1800 2 weeks ago. So there's a move to the upside. All-time high in US dollars. So people say, how far can it go? The market's demonstrating that. It's showing us how far it can go. Geopolitical tensions. We've got geopolitical tensions. You've got to think of this as far as Libya. We've got Egypt and Turkey and the tribal regions of Libya. Huge oil reserves and the uncertainty there from a geopolitical hotspot. So you've got that bubbling away. And then you've got the issue as far as Trump and China. So how does that play? All of these impacts with a selling US dollar, interest rates saying we're not having any more, Fed saying, well, do we raise more stimulus? And then we've got 95 days till an election. If they're not overarching themes to add confusion to a market and fear, I don't know what is. What is? This is unheralded, and we're seeing that demonstrated with gold.
Gold's interesting. I mean, look, if we look at Australia, where there was probably just shy of $1 billion, exported from this country last month.
Yep.
In terms of iron ore, well, okay, fine, it's 10%, but let's face it, we're exporting it, we're not storing it. Where's it going? It's clearly being hoarded. Absolutely.
Strong demand from all retail sectors, and that's the realisation. People don't value currencies, the debasement of them, and they have a look at India, have a look at China. Well, just add the numbers up and look. If you really want to go across Asia, huge consumption patterns, Pakistan, Bangladesh, you've got not a couple of people, you've got 3.5 billion to 4 billion people. It's the core market. It's 60% of the world's population in that gateway. So when we talk about South China Sea, then maybe we've got to go in the next couple of weeks and we'll look at the population base across those regions. Absolutely monstrous. So yeah, Europe's got a few people, 500 million. We've got 3.5 to 4 billion down here. So that's the realisation. They're the consumers and they're the great hoarders. Middle East are great hoarders of it, and they're running that physical demand side. What's going to be interesting is if you see gold does come off a little bit, is there gold to back up all of those derivative plays? That's another subject completely.
We'll come to that, but look, if we're talking about production, obviously if you're looking at specific into stocks, the miners, sure, the guys exploring, sure, but the guys in production seriously are benefiting right now, aren't they?
Of course they are. I mean, it's a great time to be a gold miner. These guys are doing very, very nicely, and in Aussie dollar terms and in US dollar terms. So as it's being bid up, there's no one saying, oh, look, it's overpriced. I don't hear fear. I don't hear, oh, you're crazy for holding gold. Get the hell out of there. You're crazy not to hold gold. Look what it's done in the last 4 months. We were sold off dramatically. Don't ever underestimate its little brother, silver. It's had an enormous move from that $12 in March to $22 odd today, nearly 23. Be good to see a screen. So I think it's got the capacity to be a $25 play, possibly by end of month. With the way it's going, I mean, you see these big moves. We're at 1950. Put a number out there. Only got to move 3% this week, and by the end of July, we've got August on the 1st on Saturday, we could be at $2,000, that magic number. People say, oh, do we get there by September, October? Seems to have a rocket behind it at the moment.
Speaking of rockets, our mate from Tesla seems to be talking up nickel. What do we think?
Had a big move, and his demand as far as batteries is just extraordinary, and as you know, it's a key component. Rare earths and nickel, yeah, it's still cheap. We saw $52,000 a metric tonne, a lot of saucepans, a lot of consume I think that was about 13 or 12. So it's already been at those huge stratospheric numbers. It's very, very, very cheap in the scheme of things. All those base metals are being drawn up, industrial demand, and there is no doubt that you're going to see that strong demand, I think, increase over this next decade. This decade's a very interesting one, not only from a consumption point and sheer numbers, 7.5 billion people, but think of everything: electricity demand, base metal demand, battery demand, rare earths. All of this plays, electric vehicles. We know he's an outlier, or he's a disruptor.
Consumer electronics.
Absolutely. Think of that. Everything regards batteries. So, kids, everyone's got a phone. Everyone's got a laptop. Everyone's got an iPad. It's just the way we live today. And that's just not in a sophisticated market, but it's all coming through. You go to India, everyone's got a phone. So, or a great percentage of the population have got phones. So it's a need and a want as far as a technology bridge, and we're all walking across that bridge together.
Peter McGuire, thanks very much for being with us this morning. And ladies and gentlemen, that's Peter McGuire, the CEO of Australia, XM.com.
Thank you.